Bitcoin, I think, is the solution to the great majority of the people's problems. The empowerment of Bitcoin is, wouldn't it be great if we took our money, we invested in an asset, and we could turn off the TV and forget about it for a decade?
Bitcoin was originally designed as a cryptocurrency that could be used for everyday transactions, but as its value increased, many investors began to view Bitcoin as a long-term investment. As with any investment, holding a cryptocurrency for an extended period of time means that you will have to endure price fluctuations without being tempted to buy or sell. While the price of Bitcoin and its popularity among some investors are important, it is essential to note that regardless of the value swings, scandals, and news, blockchain developments over the next decade will be the most important. In this video, we will share Michael Saylor's view on Bitcoin, as he believes that Bitcoin will make you the most money in this decade. But before we move forward, make sure to subscribe to our channel and hit the bell icon so you don't miss any updates. The power of Bitcoin is this. Wouldn't it be great to take our money and invest it in an asset that we could turn off the TV and forget about for a decade? So at the end of the day, it always comes back to Bitcoin. And for the most part, most people would benefit from just understanding Bitcoin. And Bitcoin is the solution to the vast majority of people's problems. Bitcoin represents digital transformation and financial markets. And if you want to rebuild hundreds of trillions of dollars of capital and give it a path from physical capital and fiat financial capital to digital capital, well, there's a lot of commercial banking to do. There's a lot of investment banking to do. There's a lot of money management to do. There's a lot of journalism and analysis to do. Somebody has to create the securities. We need auditors and accountants to report on it. We need lawyers to understand how to disclose and assess all the risks. There are a lot of regulations to develop or clarify. There is a lot of work for a lot of people in the ecosystem, and you can make a career out of being a leader in any of these fields. Always remember that you have to see the world as a profit and loss account and a balance sheet on your profit and loss account. You have to do something, no matter what you do, best in the world. Bitcoin was designed to be decentralized, controlled by the public, and out of reach of entities that would collect and control it. However, businesses and other people with resources buy more coins than individuals, centralizing control. In 2024, most Bitcoins are still in the wild, so to speak. However, these large entities are likely to continue to increase their holdings over time if Bitcoin continues to be treated as a speculative investment and a store of value. Therefore, Bitcoin is likely to become even more centralized as its future supply decreases. Following the approval of Bitcoin Spot Exchange Traded Funds, ETFs, more investors have access to Bitcoin, which has opened the door for the approval of Ethereum spot ETFs. It is difficult to say what regulations will emerge over the next decade because lawmakers' positions and opinions can change. Historically, halvings have affected prices, and the price of Bitcoin generally tends to rise afterward. This is believed to be due to the decrease in the available supply of unreleased Bitcoin accompanied by an increase in demand. Halvings will continue roughly every 4 years over the lifespan of Bitcoin until 2140, reducing the amount put in each time. In this context, the price of Bitcoin, all else being equal, is expected to continue to rise over time, but there is no guarantee that this will happen. No one knows where cryptocurrencies and blockchain will end up, but over the next decade, both will likely remain in the spotlight, subject to speculation and change. That's all for today. Tell us what you think in the comment section below, and don't forget to like this video before you go. Thanks for watching.